Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Speaking of the coffee can, one of the stocks that you picked in the coffee can, Page Industries, again came out with dream numbers this time around. And it's fascinating to just watch the way they've expanded business, build up demand, build up new segments, whether it was women's wear or lounge wear. And I mean, it's just growing. So I'm going to ask you the valuation question again, because you're someone who wants to look at good valuations as well. And now, these are stocks that never fall. You know, Page or even Lever for that matter has had a great run now. So within consumer, how do you pick and choose? What do you look at? Because stocks, I mean, refuse to budge from their all-time high levels.
So the template I use is that the P multiple seldom does any justice to companies whose return on capital employed is as high as Page. I think Page's ROCs are north of 40%. If your return on capital is 40, 45, 50%, you're throwing off tons of cash every year because your cost of capital is only 12, 13%. The gap means you're throwing off billions of rupees of cash, which are then plowing back into the company to fuel future growth. So the PE multiple by itself, I think, is not very helpful for a range of Indian companies, especially where the return on capital is well ahead of, say, 12, 13%, right? And therefore, what I try to do is look at both earnings growth over the next 2-3 years, plus look at return on capital. If you amalgamate the two, companies like Page, honestly, and I know it sounds surreal to say it, companies like Page don't actually look that expensive when you consider their ROC. In contrast, companies who are trading at 17 times earnings look expensive because their ROC is barely 11-12%. So return on capital is a very powerful metric. It's the single biggest driver of Indian stocks, return on capital employed. And if you have a company which is growing earnings at 25%, which is roughly what Page is doing, plus ROCs of 40-45%, it'll be folly to look at the PE multiple and sell them.
Any new stocks that have met your filter criteria, new businesses that are exciting you? We know about the old names in the coffee can.
I think for a couple of years now, Abbott Labs is a business which has looked very interesting. It's again a cash machine. I think those who haven't looked at the numbers should look at it. It's chucking off tons of cash. ROCs are very high. And I think they've begun a TV campaign. So whenever a company begins an advertising campaign on TV for the first time, I always sort of get perked up. And if it's an unlisted company, that's usually a precursor to an IPO. But if it's a listed company and the management has no vested interest in running up the stock price and an ad campaign begins, that's usually a very interesting sign.